Hello, Maverick traders. Welcome out to your market roundup. It's April 1st. Corey here with you. We're always going to take a look at meaningful news, where money's rotating, what sectors are heating up, which ones are getting colder, and then we'll highlight our very best ideas up, down, or sideways.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
So today was kind of interesting in that although the percentage moves weren't very big, Dow was down 0.5%, NASDAQ, S&P around flat, oil up 1, gold up 1, but it was more the price action. It was more the fact that you gapped higher than you sold off to finish more towards the lows. And this takes us to the daily news. So ISM manufacturing came in and beat expectations pretty handily. Came in at 50.3 versus 48.5 expected. Markets gapped up on the fact that the ISM was above 50. That shows growth. Anything sub 50 is more of a recessionary, a contracting number. But why did we sell off after? This could be a situation where good news starts to become bad for markets. And that's because, as I've been saying, the market has to come to the realization that fewer rate cuts are coming, and stronger data like this just reinforces that. So I think we started to see a little chink in the armor here where good news had been propelling markets higher. Good news tried to push the market up, and then it sold off. Advanced decline line, you can see over 50% of stocks, just over 50% declining today. And the 50-day moving average has been slowly getting a little worse here. Last week we had 68% above the 50 MA. This week we've got 65. So about 3% of stocks now falling below their 50. A little bit of weakness creeping in. If we look at the S&P, here's the line in the sand. We have not seen a lower low for months. See this low? Higher than the one before it. And here, higher than the one before it. And a higher low, and a higher low, and a higher low, and a higher low, and a higher low. And each one of these pivots was higher than the one before it. And so what do we make of that? Well, in an uptrend, you'll make equal to higher highs and higher lows. So we cannot say that we've really emerged in any sort of even short-term downtrend until we break the prior swing low at 5,200. Now that doesn't mean that the entire trend is in problematic state. It just means that in the short term, this would be the first time in months that you've actually taken out the prior pivot and made a new low. Now, having said that, today's price action with a bearish engulfing formation, a bearish candle that engulfs the prior day's bullish body, at least signals a stall out. Notice the last time we got some bearish engulfings back here, we stalled out for the next week and a half. We at least should stall out on this candlestick formation or possibly pull back, but it shows that, hey, we're in a little bit of a holding pattern at least. Best case, markets consolidate. Worst case, they pull back a little further. That's what I would make of this. But again, as we've said, give credit where credit's due. You can't really short this market. You cannot be outright bearish. It's going higher, and that trend has been intact for months. So there's just really no reason to, other than to even up the books a little bit maybe. We still don't have it. We still don't have reason to really get bearish. Now, notice the NASDAQ has not been progressing as the S&P has. We haven't made really any progress in the last month, but we haven't gone down either. So we always say, when you consolidate, you usually leave the consolidation in the direction you came from. That would give the probability still to the bulls, still to the buyers, that we can leave this consolidative pattern in the upward phase. If it's not going to do that, it needs to start reversing in the here and now. As we look at the heat map, mixed picture. Energy's been really a better segment of the market. Oil was up 1% today. Energy pretty much in the green. Everything else was a mixed bag. You had a little bit of green over here in some of the semiconductor area. You had Google up nicely, healthcare looking pretty red, consumer looking pretty red. But you'd expect to see more red. There were more stocks declining than advancing today. On the big picture, we're still above the 20, above the 50 upward slope. So, as we said, broad markets, they're not downward trending. That's clear. Or have we stalled out? Perhaps. Let's look at some areas that are of interest. My bullish areas have been in the commodity space. Things like gold miners and certainly oil. That's been the one that I've most liked. It still looks pretty darn good on the upside. Sideways and then bearish. I'm leaning a little bit more tech towards the bearish side. Again, the NASDAQ has been lagging a bit and hasn't made any real progress. So let's consider things that we might be interested in buying. I look at this chart of PayPal and I can see that it responded nicely to prior resistance at 68. When we hit 68 previously, we had a deep correction and then the recovery. That creates that cup formation. Now that we're pulling back, we have to question, well, where would the pullback lend us to buying? In a cup and handle, 68 to 56 is the size of this one. 68 minus 56, we know the cup is $12 in size. Usually the handle will be about 30% of the size of the cup. So what's 30% of 12? $3.60. So from 68, if you pull back $3.60, that puts you at 64.40, which is right down here, still a little ways down from where we're at. But in that general area, call it 64.40-ish. That's not an exact science. That's just the general zone. That's where I'll be looking at PayPal. And the big picture chart looks pretty good for a bearish to bullish reversal. So around that 64.40 is what we're looking at on the bull side. Royal Caribbean, I mentioned this one as a sideways candidate a week or so ago. We haven't really changed much in value. We've gone up a little bit. This is where I don't think there's a lot of progress. You'd anticipate if it is indeed neutral, you'll continue to come back towards this 137-ish zone. Could we stretch just a little further, a couple of dollars? Sure, but I think we'll come back in about a week or so, and it'll be crossing back around 137. It still looks like a more sideways candidate to those levels. And then if we're looking on the bearish side, something like Snowflake, big gap down, and then continues selling off, has recently consolidated and created a little tight pennant formation, most likely to leave in the direction that it came. So I would lean down and think that there could be a pretty good sized drop here back into the 150 range, maybe even into the 140s. Before this thing's all said and done, there's probably lower prices still upcoming. So we had a bearish engulfing reversal candlestick today. We might be starting to see that good news equal bad price action. Friday, we've got payrolls. There's really nothing on the earnings side to talk about this week. Earnings kick off a week from this Friday. So what would that be? April 11th or whatever that is. It's in a couple of Fridays away. You'll get JP Morgan, Wells Fargo, Citi, all of those banks that really start the earnings season. Until then, we're going to be pretty light on earnings. I hope you enjoyed this market roundup. Have a great week ahead. We'll see you next time.